Welcome to the Daily Update, Improv Edition, where I'll go over the action in the market from Monday, August 21st, and then we'll see how things look for Tuesday, August 22nd. And I'm still recording this all one take. You're going to get my mistakes and so forth. I'm really not getting much, if any, negative feedback about that. I might just keep doing things this way. It sure lessens the amount of time that I have to spend editing. What I try to do when I edit the video, for example, the full length daily video is about 30 minutes or so long. After I get done recording it, it's about 60 minutes long. And I cut out about half of that. And I'm cutting out every little second that doesn't say anything that's necessarily important, or if there's too much delay in between charts. What I'm trying to do is make that video as short as possible while putting as much information in it as I can. But this way, I record it, I'm done, I can upload it after clearing my voice and go on to other things. And that's been one of the struggles that I've had trying to get things ready in other areas that I want to present to you is I don't have a lot of extra time after I edit the video. So I'm just going to kind of go with this for right now and see how it works. I love the feedback. If you want to interject anything, either positive or negative, either by providing a comment on YouTube or Rumble or sending me an email, that is fine. Well, we did have an up day on Monday. We're trying to figure out, was this just like a little bit of a bounce or a dead cat bounce before we get set to go lower? Or are we starting to see some improvement that maybe a bottom is in place? And you can make a case for either side right now. I'll look at the charts. I'll try to show you how I'm interpreting them, and then we'll just kind of see this thing play out. Also, be aware that I am planning an online course in September. I've kind of whittled down the dates, but when I was looking at the calendar, we've got Labor Day stuck right in there. Now, for some of you, especially that are outside of the US, that may not have much of an impact. If you're in the US, you may have that day off, and that might be a good day for you to take the course. But at the same time, it's kind of the last 3-day weekend of the summer, and you might be doing something. So, any feedback on that? I wouldn't mind it. I don't even mind teaching this multiple times. I could do it on the Monday of Labor Day, the full length course, and then maybe the next Monday do the full length course, but when you don't have that day off. I'm really willing to adjust this. I've been teaching long enough and I don't mind doing the same thing different times. So just let me know. I will be going through my approach to technical analysis, and I have some theory and philosophy behind all that. I'll be going through some basic strategies as well as dealing with support and resistance. And again, there will be two versions of the class, one where we do it all in one session. I'm looking at 3 hours for that, and the other one where we break it up in 1 hour sessions over 3 days. But we still have a little bit of time before September. All right, let's go back and talk about what happened. Right at the open, we did have a higher open above R1 at 43.89, and that's kind of critical. If you remember last week, and I'll go through this when I show you the chart, we couldn't get above the daily pivot. But this time we were able to open above the daily pivot. Prices then retreated down to the unchanged level. And this time we found support at the daily pivot at 43.62. As the day went on, we went back above the unchanged level, back above R1. We climbed to close just under R2. That was at 44.09. We were below that. We ended up closing a little bit below 4,400. We were up 0.69% on below average volume. That has not changed. We're still negative as far as the short and intermediate term. In the short term, our list is getting a little shorter. We're working off being oversold. A little bit of that can be said for the intermediate term. Long term, we're still hanging in there okay. It's about inflation and interest rates and all the different things that feed into that, which are also producing some growth concerns. Some comments that we can make. We were just a little bit under 4,400. You could call it 4,400 for right now, even though we're a little bit below that. The mega caps did outperform, so we saw a little bit of strength in the big 8 companies, or the gigantic 5, or the significant 7, the wonderful 11, whatever you want to do it. but the indexes themselves ended up being mixed on the day. We had some that were up, some that were down. This is the current scenario that the market seems to be implementing, and there's a little bit of a contradiction in this. When we look at the US, the economy is stronger than expected, and that the Fed is going to keep rates higher for longer. Okay, we've known that. That's baked into the market right now. What's kind of unknown is that they may have to end up raising rates between now and the end of the year. Another thing, and this is what's been added, that goes opposite to that is we're getting a bit concerned about what's happening in the Chinese economy. We're seeing a lot of weak data coming out. A lot of US companies do business with China and Chinese companies. And is that going to impact US companies? On a short-term basis, we still have the CCI 14 and 20 and the stochastics that are giving us extreme negative readings, or you could say that they're oversold. But they've been showing some improvement, and this list is getting a little shorter. In the intermediate term, we still have the S&P 500 McClellan oscillator. Even though it bounced up, it's still extreme negative, and our PMO studies are still showing us some extreme negative readings, and I'll have charts to show you of that. The dollar was down and interest rates were up. Now, one of the headwinds last week for stocks going any higher, in fact, they were going down, was the fact that interest rates were going up. And also the dollar was going up. Well, that didn't seem to matter as much in Monday's session. Interest rates were up, the dollar going down, but it wasn't down all that much. So the market just decided to do what it wanted to do, regardless of what was happening in other markets. All of the yield curves that we follow are still inverted. Sentiment is neutral at 46, where it had been at 45. Our trend is still negative, and the ADX is weakening. It's below its moving average. We're still above 20. We are trying to turn back up, so we could be developing a new trend. Because of the update, our bias is positive, but I'm keeping our longer term momentum, the last 2, 3, 4, 5 days, at mixed with more of a negative slant, because we've been more negative than positive. We didn't have any economic reports that came out on Monday. There'll be some more later in the week. Here's the intraday chart. If you notice the first thing, if you go all the way back a week ago, Monday, we don't really count that. But if you look at Tuesday, Wednesday, Thursday, and even Friday, we were never able to get above the daily pivot. Well, we opened above the daily pivot on Monday, and that was acting as support before we got set to go higher. Is that showing a little bit of shift in the market? Not necessarily, but it is something that we're observing, and that's kind of turning things a little bit more positive. This is another thing. Going back a number of days, as we started to hit this weakness in the latter part of July into August, you notice how the red line, which is value, it was constantly outperforming the blue line, which is growth, as we were going lower, 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 lower. Well, we saw kind of a big shift in Monday's session where growth really did outperform value. We need to see more than just this, but this is suggesting anyway that there could be some improvements coming into the market. We look at the growth to value ratio on the intraday chart, where it just shot up right out of the gate and then drifted higher as the market was also going up. This is also shifting things more positive. And we could all we could lose this positive backdrop very easily. We just have to go with what we're seeing right now. We did see fear tick down just a little bit with the VIX, where the line chart and the bar chart did decline. We're seeing a drop off in volatility when we measure the VIX of the VIX against the VIX itself. This is still a bit of a concern. On one hand, the fact that this line is going up when we look at the 5-period simple moving average of the equity put call ratio, but it could be a good thing in that we're just starting to tick down a little bit. If we spike and start to come back down, if you look at other times when that happened, that often marked a bottom in the market. We're not quite there yet, and some of this, unfortunately, we'll have to notice through hindsight. We're just seeing this as it's being played out right now, and it's shifting a little more positive. Then looking at the VIX of the VVIX and taking a ratio of that, we're flattening out a little bit, but we're still a bit concerned about this chart. We have been declining since we hit that bottom in late 2022. We're flattening out right now. We want to see this turn and go back up if we're going to turn more positive on the market. Also, longer term, with the 253-day moving average of the equity put call ratio, it had been declining. That's longer term positive. We're starting to go back up, and it's going to take a while for this to shift. So we'll just have to see if this ends up turning back down or if it's going to continue higher. We're also seeing more intermediate term strength when we look at the ratio between risk on and risk off, but short term, we're still seeing a decline, meaning that folks are favoring bonds over stocks in the short term, but intermediate term, it's stocks over bonds. This is a chart that I have not been able to show for a long time. This is the first time in 2023 and almost going back to 2022. This is the mass index. And we're not generating a signal with this chart yet, but we're coming up to this dashed red line. If you watch any of the other videos, I try to explain this. How this works is when we go above the red dash line, that's signal number one. We don't do anything based on that. And then we wait for it to go above the blue line. That's signal number two. And then when we come down and drop back below the blue line, that's signal number three. And boom, that is a full signal at that point. Whatever the market is doing at that time, this indicator tries to say, okay, if we were going up, now we're going to shift and go down. If we were going down, now we're going to shift and go up. It doesn't tell us the direction of the trend, but it tries to measure a change in the trend. We're not there yet, but we'll just be keeping an eye on this. Then we look at accumulation distribution. We're still below a declining moving average, but we are showing some improvement. This is trying to measure what the smart money is doing. Also looking at our trend, where we're turning up a little bit with the ADX, but we're still below the moving average, suggesting that the trend is still there, but it's weakening. However, we would still default to the negative because the red line is on top, even though it is declining. On the short term, we are showing the beginning of a trend. Again, we would default to negative because of the red line. Now, this could shift if we see more upward action, but right now we just have to go with what we see here. Then looking at our daily chart, we're trying to get a bit of a context here where we came down to this previous low right here, which also ended up being a previous high. And that technically would be quite positive to come down here, test this, and then bounce up off of that. But we need to see more follow through. We're still below the 50-period moving average. Although when you look at the 50 and 200-day moving averages, they are still going up. So that is positive. And then on the bottom, we see where we drop off, continue to drop off with below average volume. The slope, which is our shortest term oscillator, continues to be negative, but it's starting to get into extreme negative territory. It could still go lower than this, but if we start to see this turn back up, that would be more positive. Also, the MACD dropping below zero, and right now is clearly negative, but at other times when we get down to this point, sometimes we've seen it turn and start to go the other way. Looking at our 20-period simple moving average study, we're no longer extreme with the 20 period. We bounced up out of that. We turned up a little bit with the 50 and we're flat with the 200. Looking at our moving average tree, we never made it quite down to the 100-day moving average where we're seeing a little bit of recovery. Now, if we do start to go back up, are we going to be able to break through the 50 and then eventually the 20? That would signal things that are getting stronger, but we're right in between the two right now. Our standard deviations, after getting into the third standard deviation, we're getting back up. We're just underneath the border between the 1 and 2 standard deviations. So this is working off that extreme oversold condition. Here's the S&P 500 McClellan oscillator where we did show a bounce up from here, but we're still extreme negative. Improving, but just looking a little better at this point. The Chaikin money flow also is still negative, but showing some improvement. The RSI, based on 9 periods, is no longer extreme negative and now starting to bounce back up. We turned up a little bit with the RSI 14, but both of these are still negative. The PMO study, we're turning back up after getting extreme with the PMOs that are rising. We're still extreme with the buy signals, and we're still declining with the PMOs that are above zero. The Ichimoku cloud, we're in the cloud. Sometimes we're able to find support in here. Is that what is happening now? We'll just have to see this play out some more. The longer term MACD, this is more negative in the long term. We're starting to cross below the moving average, and this is actually generating a signal, which is longer term negative. Now, we could still recuperate from this, but we have to go with this for right now. We're also continuing to see for about the third day in a row now where growth is outperforming value with the S&P. So this is showing some improvement as well. The short-term fib levels. On Friday, we did come down almost to this 100% retracement level, and now we're starting to bounce up off of that. If we fall, will this support hold, or are we going to see a continuation of prices going higher? Our longer term fib chart also came down just above the 61.8% retracement level and showing some improvement. We're still hanging on to support with the Dow. Even though it was down slightly on Monday, we're still above this S1 level. That's the positive side. On the negative side, we're below the 50-period moving average. Longer term with the NASDAQ 100, we've been watching the PPO momentum oscillator. It's just ticking up a little bit. It's actually going more sideways, but we're waiting to see if this is going to show some improvement. When we hit a low back in March, we actually were able to show an improvement above zero. This time we're dropping below zero, and we're wondering if this chart will continue to improve. Looking at the NASDAQ, we came down to this S2 level on Friday, and now we're going up from that. That's positive. We're still below the 50-period moving average. That's negative. Looking at the fib study for the NASDAQ, we came down to this 13,152 level, and we seem to be bouncing up off of that. Is this suggesting that the bottom is in? Looking at the NASDAQ 100, also came down to this S2 level and showing some improvement, but we're still below the 50-period moving average. We have some pretty significant overhead resistance now going back to this previous high, and as well as some pivot points in here. But for right now, it's looking a bit better. Looking at the fib study for the NASDAQ 100, didn't quite come down to the 61.8% retracement level, but we are showing some improvement on this chart. The small caps, after dropping down below the 200-day moving average, have now been able, well, we got a little bit above it, but we ended up closing down a little bit below the 200-day moving average. That's the negative side. On the positive side, we're still working off of a recent golden cross. Looking at the Russell 2000 small cap index, where we're getting extreme negative with the RSI and showing a little bit of improvement. Based on price, we have bounced off the 200-day moving average, but we're still clearly in a downtrend. The MACD is still suggesting that the momentum and the trend is down. The mid caps never did get down to the 200-day moving average, showing a little bit of improvement here. Looking at bond yields, they continue to go up. That didn't freak out the market on Monday. Then here's one that I haven't shown in a little while. This is the ratio between longer term bonds, 7 to 10 years, and then comparing them with 3 to 7 year bonds, which are shorter term. And I say over here, if the Fed was finished raising rates, this chart would be going up. Well, you can see it's going down. So they're pretty much convinced that the Fed might not be done raising rates according to this chart. This suggests that the markets are not completely confident that the Fed is finished. And that's where we're at right now. We don't know what the Fed's going to be doing going forward. Everybody has an opinion, but we have to look at the facts and try to just conclude that at this point, we're not really sure. All right, here's another chart that I haven't shown for quite a while. This is taking intermediate term corporate bonds, which are considered to be more risky, especially when you compare them to the 3 to 7 year treasury bond, which are considered to be very safe. If the markets had economic confidence, this chart would be going up. Well, look at what we're doing. We've been going up. So we're showing some confidence economically right now based on this chart. If we see this really start to head down, then that means there will be a lack of confidence in the market. And just to compare the two, as of Monday's close, the intermediate term bond, its yield to maturity is 5.75%. Where you look at the government bond, its yield to maturity is at 4.22%. So yeah, if you want a better return, you're willing to take on more risk. This is similar to what we're seeing when I look at that chart between conservative and risky bonds. This is kind of like that same thing. Then looking longer term with the PPO study on the weekly chart, we're coming down a little bit in the long term, showing some weakness in the intermediate term, actually showing a little bit of strength so far in the short term. But this is a weekly chart, so these can change pretty much as each day goes by. Then looking at the weekly chart of the S&P, we're still below this resistance level, wondering if we topped out and we're going to continue to go down, or are we going to give it a try and come back up and retest this trend line? Seeing that same thing with the NASDAQ 100, we're still below this resistance level. Longer term, this is more negative, where we take the ratio of the NASDAQ 100 to the Dow on a weekly chart. We came up to a really high reading. We're starting to come down. Well, so far this week, we're ticking back up slightly. Then looking at Tom Bowley, this is the research that he has for the month of August. It's the third worst calendar month of the year, where energy tends to not be hot, and it's been hot, where tech tends to be hot, where it's not been hot. We're coming now into the middle to latter part of the month where we, based on his research, tend to see more weakness. Also, we're dealing with his research that says from May to August is when growth tends to outperform value. And we're starting to see that with a little more conviction now. So what's our outlook for Tuesday? We're still getting earnings reports. The big one will be NVIDIA later in the week, and that'll have a big impact on the market. The markets are really anticipating Chair Powell's speech on Friday at Jackson Hole. That was a real market shifter when he gave that speech a year ago. We're going to have to see if that has an impact coming up on Friday. The technicals, we're still negative. You can't deny that. And so far, it looks like we're working off being oversold. But at the same time, we're seeing a lot of things coming together that may suggest that we're putting in a bottom here. We will be getting existing home sales on Tuesday, and then we're keeping an eye on the geopolitical events. It's always about inflation and interest rates, as well as growth concerns as far as the market is concerned. Here's the economic calendar showing that we will be getting existing home sales on Tuesday. The big one will probably be durable goods on Thursday, and then on Friday we get consumer sentiment, and then the market's really getting ready for Fed Chair Powell's speech. Stock Traders Almanac statistics. We're now at the week after options expiration, where we're up 66.7% of the time. We're down 33.33% of the time. For August 22nd, we're pretty positive here with the Dow, S&P, and NASDAQ. Not neutral to positive, but historically, this has been a good day. Now, this takes all the days, whether they're pre-election or not, going from 2001 up to 2021. But when we look at just the election cycle, we didn't really get this nice little bounce that we thought we were going to get. Is it just delayed? Is it going to happen now? That's always a possibility. Also, keeping an eye on the NASDAQ. We didn't seem to get this bottom earlier in August. Maybe we're getting it later in August, and that will help out the market. Then looking at the S&P, also following the green line, not really seeing much of a bounce yet. Is it just going to come a little bit later, if at all? We will be on the 16th trading day of the month, where you can see with the dashed lines, we tend to be positive. Even when you look at the actual full line here, the solid line, that's what I was trying to think of. We tend to be positive all the time on this day. Then we're beyond this window where we typically see some kind of a bounce. We're wondering if it is getting delayed this year, if it even ends up happening. So our scenarios, we're still leaning towards the down one. Our technicals are still negative, and right now it just looks like we're working off being oversold, but at the same time, we're wondering, is a bottom being put in right at this place? We're not going with the up one right now. We just don't have a lot of confidence in that, even though some things are improving. You potentially in the short term could still look at going neutral, because the short-term ADX is still below 20. However, it has crossed above the moving average, so it is suggesting that a new trend is starting. The warning signs, we did see a convergence of these short-term bearish signals. That's what was giving us so much trouble coming into the latter part of July up till the present time. And we're wondering, are they finished or not? The longer-term trend signals on the weekly chart were still below the trend line with both the S&P and the NASDAQ 100. Seasonally and historically, August is a difficult time, but we're now beyond the time when we should have been seeing a positive, at least short-term season. We're wondering if that is being delayed. Our oscillators are still negative, both for the S&P and the NASDAQ 100. Those are still down. The VIX, even though it ticked down a little bit on Monday, has really been climbing overall. The equity put call ratio, it's starting to spike up. We saw a little bit of a tick down. That could turn more positive if we continue to fall with this ratio. The S&P, the NASDAQ 100, and I keep forgetting to add the Dow and the small caps to this, and the mid caps. Everything is below their 50-day moving averages right now. The cumulative new highs, new lows for the NASDAQ are still showing weakness. We're still above the 3-month yield set back in 2007. We ticked up a couple of notches in Monday's session. S&P 500 growth is weakening, but it's still in a longer-term uptrend, but we could be seeing a bit of improvement there. The parabolic SAR on the daily chart and weekly charts are still negative. The vortex is negative, and we're still dealing with earnings season. The positive signs, we do have seasonality and setups, and I discussed those in the weekly video. Those still remain in the background. The daily special K chart is positive. The weekly chart is negative. The long-term equity put call ratio is still declining, but it's starting to turn up. We're wondering if it's going to start to turn back down. The S&P is still above the downtrend channel upper line. We're still in a longer-term risk-on posture, but shorter term, we're seeing some weakness. The S&P is outperforming utilities, and the staples to S&P 500 ratio is declining. When you take these last 2 points together, they often give good support to the S&P. We need to see more follow-through. We've been seeing this for quite a while now without seeing a lot of improvement in the actual price of the S&P. The small caps, as we look at by the Russell and the small cap index, as well as the mid caps, they still generated recent golden crosses. Small and mid cap growth continues to be positive. The financial sector has generated a golden cross, even though it's seeing some weakness lately. And we're asking, is there a convergence of these bottom signals that are starting to form? Our conclusion, we're negative still and working off being oversold. That's how we have to classify it right now. At the same time, we're wondering if we're forming a bottom. In the short term, we're negative and working off being oversold. The same thing is pretty much true with the intermediate term. In the long term, we're still positive because we're above the 200-day simple moving average. Thank you. I hope you found this helpful. I hope you like this newer format. I hope you have a really good day, and I will talk to you in the next video.